Hello everyone, this is Bhavik Chokshi here and I hope you guys are doing great. Today we would be doing a quick concept revision for Ind AS 24 related party transactions, which is a tier 2 category standard in terms of importance. Now related party transactions have to be disclosed as a part of notes to accounts in both the SFS as well as CFS. So there are two parts of the standard that we need to focus on. First part, who all are the related parties, and second, what is the disclosures to be given in the related party report. Now, in the first part of who all are related parties, we look at individual relationships as well as corporate relationships. So, with a reporting entity that is a company, there are four categories of individuals, including their close family members, which may be considered to be related. First, persons having control, that is an ability to direct relevant activities, which usually arises at greater than 50%. Second, persons having joint control through an arrangement where they have joint control, or persons having significant influence, that is greater than or equal to 20% stake, or having participation rights. These are individuals who are significant or substantial shareholders in the company and hence have a related party relationship. Secondly, we have just focused on the ownership relationships. There can also be relationships that arise due to key employment relationships and hence key managerial personnel of the reporting entity as well as of the parent entity. Remember, we look at the parent entity over here but not the subsidiary entity. So the key managerial personnels include, let us say, all directors, whether independent or executive, non-executive, all directors, does not really matter, and key function heads like a CFO, CEO, CEO, etc. All of these are treated to be related parties. Now, what will be the close family members? So when you look at individuals include, sometimes they do not do transactions directly, they do it through their families. So close family members can include the spouse, the parents, the children of the entity, brothers and sisters, all of them are covered. However, an additional layer, that is domestic partner, like the live-in partner that you have, it's, remember, an international standard, so they kind of consider the domestic partner or the spouse to be kind of similar. So your close family members include the spouse or even the domestic partner, and children from the spouse or even children from the domestic partner. So these are individual relationships with the company. Second, and the more important in my opinion, is the entity to entity relationship. So if I am a part of a group, then members of the same group. Sir, what do you mean by group? Group refers to entities which are under the same control or are under common control. So for example, when you look at Tata Group, it has Tata Sons at the top, and then it has, for example, Tata Motors, which is one of its subsidiaries, and Tata Steel, which is another subsidiary. So Tata Motors and Tata Steel are under common control and hence they are part of the same group. So members of the same group are treated to be related parties. Now they can be direct subsidiaries or direct parent. There can be ultimate parent or immediate parent. It can be fellow subsidiaries as well. All of these are related parties. All the members of the same group are treated to be related parties. So no matter how distant the relationship is, like there is P for parent, S for subsidiary. So there is a parent which has S1, then S1 has S3 as a subsidiary, and then S2. Between the two there will be a related party relationship. Members of the same group are treated to be related parties. Remember, joint ventures and subsidiary, joint ventures and associates are not treated to be a part of the same group. They may be related parties under different clauses, but they are not treated as group members. Group members are treated as members where there is a control relationship, that is parent, subsidiaries, sub-subsidiaries, fellow subsidiaries, etc. Second, joint ventures or associate of the entity or a group member. So if there is P which has a joint venture, that is a related party. If P which has an associate, which is also a related party. However, if P has a subsidiary S1 and S1 has a joint venture, P has a subsidiary S2, S2 has an associate, then inter se for S1, the associate of S2 will be a related party. For S2, the joint venture of S1 will be a related party because they are all members of the same group. So over here, a joint venture or associate of the reporting entity or another group member. Remember, a joint venture of a joint venture is not a related party. So if I have P ke niche, I'm not sure whether I've shown that over here. Yes, okay. So if I have P ke niche, I have S1 and S2. Now S1 is related to J1 because it is a joint venture of S1, which is a group member. However, S2 is not related to J3 because it is a joint venture of J1. J1, yes, is a related party, but it is not a group member. The standard defines joint ventures and associates of the reporting entity or a group member of the reporting entity. Next, you look at common entities where there is, let us say, both entities which are joint ventures of the same third party. So for example, there is, let us say, a company Honda. Honda has or had in the past entered into two joint ventures. There was, let us say, Hero Honda, which was a joint venture, and let us say there is Honda Toyota, which was another, let us say, joint venture. Just a second. In which case, in both of these arrangements, it was Honda which was having a joint control. So Hero Honda and Honda Toyota will be related to each other. So two entities which have joint control, and the joint controlling parties is the same party, it is considered to be a related entity. So over here there's P which has J1. So between J1 and J2 there is a related party. Obviously between P and J1 there is a related party relationship, but here we are saying that even between J1 and J2 the related party relationship exists. However, the standard is not very clear when it comes to having related party relationships between joint ventures of group members. We have extended this understanding based on a practical approach where in substance over form, when we look at the joint venture of the same reporting entity, obviously this is a related party. However, P can have S1 and S2 which are its subsidiaries, and this S1 can have a J1 and S2 can have a J2. Well, is this a related party relationship? The standard is not very clear. It just says two entities which are joint ventures of the same third party. It can be the same third reporting entity or the same third reporting group. We consider this to be the same third reporting group. So we say this is a part of a single group, and both these entities are joint ventures of the same group, and hence we treat them to be related parties. Now over here we look at co or fellow joint ventures. Next is you have joint venture. One entity is a joint venture of the third party and another entity is the associate. So instead of having J1 and J2, you have P which has J1 and then it has A1. So over here also there is a related party relationship. One entity is a joint venture, another entity is an associate of the same third party. Now, what is not included from what we have studied? What is not included? It is the co-subsidiaries, which is included, co-joint ventures, which is included, but co-associates. Which means if there is P and P has A1 and A2, merely because P is having a significant influence in A1 and P is also having a significant influence in A2, A1 and A2 are not treated as related parties. So over here, in summary, if you see over here, we have mentioned all of these related party relations. S1, S2 related, S1, J1 related, S1, A1 related, J1, J2 related. All of these are related. However, if there is this last relationship where you have P and P having associate 1 and P having associate 2, merely because there is a party which is having significant influence at both places, it is not treated as a related party relationship. Remember the general rule, there has to be control or joint control at one of the places, and then there can be control, joint control or significant influence at the other place to have a related party relationship. You can't have significant influence in both places and say that there is a related party relationship between the two. That is even substantiated in point E, where there can be a person, including the close family member of that person, who should have control or joint control in one of the entities, and that same person or their family member should have control, joint control or significant influence or a key managerial relationship in the other party. In that case, there is a related party relationship. So over here, as we see over here for summary terms, we can say that, well, there is a related party relationship if there is Mr. X who has control or joint control, and then there is the same Mr. X or his family member who can have control, joint control, significant influence or KMP. So when is there no related party relationship? If the same person or their family member merely have significant influence or they are acting as KMPs in both the entities, in which case there is no related party relationship between these two. So over here there will be no related party relationship. Now, apart from these general pointers that we have discussed, there are two other relationships where the entity and the, let us say, post-employment plan or the employee benefit plan of the organization, like the recognized provident fund that the entity maintains, there is a related party relationship between the two. Again, if, let us say, there is a company which is providing key managerial services to the entity, there is a related party relationship again over there. So this kind of by and large takes care of the entity related party relationships. A few clarifications on what is not a related party, like co-associates, two entities which are having significant influence by the same party, no related party relationships. Co-venturers, where let us say there is a joint venture between Hero Honda, so there is Hero and Honda, and there is a joint venture Hero Honda. So between Hero and Honda there is no related party relationship. Yes, for Hero Honda Limited both of these are related parties, but between Hero and Honda there is no related party relationship. Co-venturers in a joint venture are not related parties. Again, two entities are not related parties to each other merely because there are common directors in them, and major suppliers, major distributors, major customers, major providers of finance like banks, they are not related parties. When you do income tax, there may be associated enterprises, that is a different section, that is a different definition. So this is like the first part of the standard. Second part of the standard, which is on related party report. Well, exam questions don't ask you to prepare related party reports, but they expect you to understand the basic principles of the related party report, which needs to be disclosed in the notes. There are two parts of this report. First, you have to show the name and the nature of relationship. Second, you have to show the disclosure of transactions and outstanding balances. Do we have to give the name and nature of relationships of all parties? Well, the standard says wherever there is control relationship like the parent and subsidiary, you have to give nature and name for all the parties whether there are transactions or not during the year. However, in case of other relationships like key managerial personnel relationships or associates or joint ventures, in all of these cases, the disclosure of name and nature of relationship is to be given if and only if there have been transactions during the year. If there are no transactions, you don't need to give the name and nature of relationships. Secondly, in case of parent entities, you need to segregate the parents into three categories. First, there is the immediate parent, if any. So if there is a chain of holding, then the immediate parent. Next, the ultimate parent, who is the ultimate holding company. And there is a new concept called as next most senior parent. If your immediate parent or your ultimate parent is not preparing accounts for public use, then you need to identify, if possible, a next most senior parent which is closest to the entity and is preparing accounts for public use. That is, for example, it is like listed. So these are to be disclosed in the name and nature of relationship. Now going forward, you have to disclose the transactions and outstanding balances. Before you go over there, a few pointers that you should be aware of, a few key points. Is it possible that the related party relationship is established during the year, in the middle of the year? Yes. In such a case, you have to give disclosure of transactions only for the period when the related party relationship was in existence. Again, while disclosing transactions, management might be of the opinion that the transactions are happening at fair price, and because they are happening at fair price, we don't need to give a disclosure. Remember, Ind AS 24 does not tell you that disclosure is to be given only if the transactions are not at fair or arm's length prices. Your job is to give reporting irrespective of whether transactions happen at fair price or other than fair price. Your job is to give a disclosure. In fact, if the transactions are happening at other than fair prices, it is voluntarily required to give disclosure of those favorable terms if required, but we cannot say that we will not give a disclosure merely because the transaction is happening at fair price. Secondly, maybe transactions during the year are of low value. Standard believes that the fact that they are with the related party, they are material transactions irrespective of the value of the transaction. So even if the transactions are of low value, we still have to give a disclosure. No excuses permitted. If there's a transaction between key managerial personnel, you have to give the breakup of how much benefits are on account of short-term benefits, post-employment, other long-term benefits, termination benefits, and ESOPs or stock options, as the case may be. Next, if possible, you will try to disclose the transactions with each related party separately. However, in case a company has multiple related parties, then the law allows you to aggregate these transactions into broadly similar nature, like transactions with subsidiaries, transactions with associates, transactions with joint ventures, and so on. In the related party report, what you will disclose, as we said, first is the name and nature of relationships, and then is the nature of transactions and outstanding balances. Transactions can be like sales, purchases, interest income, interest expenses, even transactions which may be off the balance sheet like guarantees given. All of these will be disclosed. Apart from that, outstanding balances like debtors, creditors, loans given, loans taken, etc. will also require disclosure. The only exception which is there or exemption which is available is for companies which are either directly or indirectly either controlled, jointly controlled, or significantly influenced by the government. Now, the government might have various companies like Bank of India and Indian Oil. Both of them are government companies. And as a result, the government the Ind AS believes that if two entities are related to each other merely because there's a government which has either control or joint control or significant influence, whether directly or indirectly in them, then you are exempted from giving the disclosure for the name and nature of relationships and the transactions between these parties. All you have to do is you have to give the disclosure about the name of the government which is related to you. The other entities like fellow subsidiaries which are merely controlled by the government, you don't need to give disclosure. However, if you believe that disclosure of a particular transaction is required for a better understanding of the investors, you can give disclosure for such transactions. Okay, so this is a very quick roundup about Ind AS 24. I hope this discussion helps. Please do like, share and subscribe. And in case you have any comments, please do let us know in the comments box and we will be happy to address them. Have a good day. Goodbye. Take care and all the best for the preparations.